Welcome back, everybody, to another deep dive into some fascinating real estate insights.
Yeah.
Today, we're talking all about passive income strategies in Chicago's commercial real estate market.
Oh, very cool.
We're going to be pulling our information from Michael Linton and the Chicago Deal Flow team.
Great source.
Yeah, really great information over on chicagodealflow.com.
Yeah, definitely.
So we're going to be diving into what passive income, how it applies to the Chicago market,
Okay.
and then some of the key strategies that are used.
Sounds good. I'm ready.
All right, so let's just jump right into this thing.
Yeah.
What is passive income? How does Michael define it?
Well, he kind of goes beyond just the basic definition.
Yeah.
He really emphasizes its importance in the Chicago market specifically.
Right, and I think that's what's really interesting about this piece.
Yeah,
It's not just like, here's how to make money. It's like, here's how to build long-term wealth.
exactly.
And how to think about, like, actually building financial freedom. So when Michael's talking about passive income in the context of Chicago commercial real estate, what does he mean by that?
Essentially, he describes it as, generating that regular cash flow with minimal ongoing effort from the investor.
Okay.
So it's about, owning these income-producing properties or investing in vehicles that provide those steady returns,
Yeah.
but without actually needing to be that hands-on landlord.
Okay, so it's about letting your money work for you. It's not you working for your money.
Precisely.
But why Chicago? I mean, why is this market a good place to consider this type of investment?
So Michael points out several key advantages of the Chicago market.
Okay.
First off, the stability.
Yeah.
Chicago's market is historically known for its stability.
Right.
It's weathered economic storms better than many other cities.
Yeah.
And that offers investors a sense of security when they're looking at building that long-term passive income stream.
That makes sense. I mean,
Right.
stability is key when you're thinking long-term. So besides stability, what else are you talking about?
Another big advantage is Chicago's incredible diversity.
When you say diversity, what do you mean?
Well, I'm talking about the wide range of property types and locations.
Okay.
You've got everything from those, towering skyscrapers in the Loop to the charming storefronts up in Lincoln Square, all the way to sprawling industrial parks out in the suburbs.
Yeah.
And this allows investors to spread their risk a little bit
Yeah.
and tap into different pockets of growth and opportunity.
That's really interesting because it kind of feels like
Yeah.
it doesn't matter what your risk tolerance is.
Exactly.
You can kind of find a place.
You can find a niche for yourself in the Chicago market.
Yeah.
Whether you're, very risk averse or you're willing to take on a little bit more risk.
So we've got the stability, we've got the diversity.
Uh-huh.
How does this tie back to the time efficiency
Right.
that passive income offers?
It all boils down to leverage.
Okay.
Chicago has a really robust network of real estate professionals
Right.
that investors can leverage to delegate tasks like property management, leasing, even the legal and financial aspects.
Oh, wow.
And this frees up time for busy professionals who might not have,
Yeah.
the bandwidth to manage properties directly. They can
Right.
focus on other priorities while their investments are kind of humming along in the background.
So passive income is not just about making money, it's also about like having time to live your life.
That's a great way to put it. It's about achieving that financial freedom that gives you more time and flexibility.
So Michael also talks about the tax benefits,
Right.
which is definitely a perk when you're talking about investing.
Yeah, huge perk, especially in real estate.
So can you unpack that a little bit? Like, what's he talking about?
Sure, one of the key advantages he mentions is depreciation.
Okay.
So this allows investors to deduct a portion of the property's value each year,
Yeah.
which reduces their taxable income.
Oh, wow.
And then there's the potential for 1031 exchanges, which allow investors to defer capital gains taxes when they sell one investment property
Right.
and reinvest the proceeds into another.
I've heard about those, yeah.
It's a fantastic way to kind of keep that momentum going and keep growing your portfolio without taking that big tax hit.
So it sounds like Michael's painted a pretty compelling picture
Uh-huh.
of why passive income is so attractive in the Chicago market.
He's made a strong case for sure.
But I kind of want to shift gears now
Okay.
and talk about how you actually do this.
Right.
Like, what are some of the specific strategies that he recommends for generating this passive income stream?
He gets into quite a few,
Okay.
each with its own, nuances and intricacies.
Yeah.
So let's start with one that's pretty common, triple net leases or NNN leases.
Okay, I've heard that term thrown around,
Yeah.
but I don't really know what it means.
Can you break it down for us? Yeah. So in an NNN lease, The tenant is responsible for not just the rent,
Right.
but also for property taxes, insurance, and even a lot of the maintenance expenses.
Wow. So that's a lot.
It is, and that's what makes it so hands-off for the owner.
Yeah.
They basically collect rent, and the tenant takes care of everything else.
So this seems like ideal for somebody who wants to, get into real estate.
Right.
But they don't want to actually be a landlord.
Exactly. They want the benefits of ownership without the headaches
Yeah.
of dealing with all those day-to-day operational details.
Does he mention where in Chicago this is a common strategy?
He does. He points out that NNN leases are particularly prevalent in Chicago's suburban areas.
Okay.
Places like Libertyville or Lake Zurich.
Okay.
Think about those standalone retail properties that you see along major roads,
Yeah.
often occupied by national chains.
Yeah.
Those are very often operating under NNN leases.
Okay. So give me a hypothetical example of how this might play out in Chicago.
Sure. Imagine a standalone pharmacy
Okay.
in a bustling suburb like Schaumburg.
Okay.
Now, let's say this property is leased to a national pharmacy chain on a long-term NNN lease. The owner, they're collecting those rent checks each month.
Yeah.
And the tenant is responsible for all the other expenses.
It's a pretty passive income stream.
It's about as passive as it gets in real estate.
Okay. So we've got NN leases. He also talks about REITs, right?
He does real estate investment trusts, or REITs, as they're often called.
Okay.
These are a really interesting way to kind of dip your toes into large-scale commercial real estate
Okay.
without having to buy a whole property outright.
So I don't have to go buy the Willis Tower.
Not unless you want to.
Okay.
But with REITs, you're essentially buying shares in a company
Right.
that owns and manages a portfolio of properties. And these portfolios often focus on specific types of real estate or specific locations.
Okay.
So you can kind of pick and choose
Yeah.
based on your interests and your risk appetite.
So for example, if I wanted to get into, downtown office buildings,
Right.
I could find a REIT that focuses on that.
Absolutely. You could invest in a REIT that specializes in Class A office buildings.
Okay.
Right there in the Loop and surrounding areas.
Yeah.
Or maybe you're more interested in the residential side.
Right.
You could look for a REIT that focuses on apartment buildings,
Yeah.
maybe in specific neighborhoods or suburbs that you think are going to be, hot in the future.
So you can kind of diversify as well.
You can absolutely build a diversified portfolio of REITs.
Interesting. Okay, so that's REITs.
That's REITs in a nutshell.
What if I want to be a little bit more hands-on?
Okay.
Like I want to actually, own a property.
He talks about that too.
Yeah.
He highlights multifamily apartment investments as a really solid option for passive income.
Okay.
And he emphasizes that investing in these types of properties, particularly in those growing suburbs that we talked about earlier, can offer really stable returns.
Okay, but managing, like a multifamily apartment,
Right.
that can be a lot of work.
It can be.
So how do you make that passive?
That's where professional property management comes in.
Okay.
Michael stresses that by hiring a reputable management company, you can essentially transform this into a very hands-off investment.
Okay.
They handle all of those, tenant interactions, the maintenance, the rent collection.
So I'm just collecting rent checks.
Essentially, yes. You're reaping the rewards without the day-to-day headaches of being a landlord.
Okay. Can you give me a hypothetical example?
Absolutely. Let's say you own a 50-unit apartment complex
Okay.
in a vibrant suburb like Hoffman Estates.
Okay.
Catering to young professionals and families.
Yeah.
You've got a property management company handling everything.
Yeah.
All those tenant interactions, maintenance, rent collection.
Right.
You're basically just enjoying that passive income stream.
That does sound nice.
It's a very attractive option for a lot of investors.
Okay. But realistically,
Yeah.
getting into something like that requires a lot of capital.
You would think so, but Michael points to a strategy that's opened up access to commercial real estate for those with smaller amounts of capital.
Okay.
Commercial real estate crowdfunding.
Crowdfunding.
Okay.
You heard of that?
I've heard of it for creative projects like
Right.
Kickstarter and stuff.
Exactly. But it's moved into the real estate world as well.
Okay.
These online platforms essentially pool funds from multiple investors, allowing them to invest in larger commercial properties
Right.
that would normally be out of reach individually.
Interesting.
So you don't need millions of dollars to get started,
Right.
but you can still gain exposure to some really exciting opportunities.
So it's like I can get a piece of the pie
Exactly. You can get a slice of that Chicago real estate pie
without having to buy the whole pie.
without having to bake the whole thing yourself.
Well, give me an example of this.
Sure. Imagine a mixed-use development project
Okay.
in the West Loop.
Okay.
A super trendy rapidly developing area.
Yeah. Through crowdfunding, you could potentially invest a smaller amount,
Right.
become a part owner of that development,
Yeah.
and share in the potential profits.
That's a cool.
It's a really exciting way to get involved in some of those high-profile projects.
Okay, so we got NNN leases,
Yep.
REITs, multifamily investments,
Right.
crowdfunding.
That's right.
What else?
All right, so this one's for those who meet certain income or net worth requirements.
Okay.
They're called accredited investors.
Okay.
And Michael suggests for this group private equity real estate funds.
Private equity real estate funds.
Yeah.
Okay, can you explain those?
Yeah, so essentially these funds pool capital from multiple accredited investors,
Okay.
and then they invest in a diversified portfolio of commercial properties managed by experienced professionals.
So it's like they're taking care of everything.
Exactly. You're leveraging their expertise and their network.
Okay.
The key advantage is that you're spreading your risk across multiple assets.
Diversification.
Exactly. And you're potentially gaining access to larger deals
Okay.
that wouldn't be feasible individually.
Gotcha. Okay, so give me a hypothetical.
Sure. Imagine a fund focusing on value-add office properties
Okay.
in strategically located submarkets,
Yeah.
like the O'Hare area or the East-West corridor.
Okay.
These areas often have really strong growth potential,
Yeah.
and the fund managers have that expertise to identify and acquire properties that can generate solid returns.
Okay, so we've covered like a lot.
We've covered a lot of ground
Yeah.
just in this initial, foray into passive income strategies.
And I feel like we're just scratching the surface.
Oh, we are. There's a lot more to uncover.
Does he talk about any other, like, kind of more innovative approaches?
He does. He delves into some really interesting strategies that are gaining traction,
Okay.
reflecting the kind of evolving landscape of real estate.
I'm ready. Let's hear it.
All right, so let's dive into some of these innovative strategies.
Okay.
One that Michael highlights is called covered land plays.
Covered land plays.
Okay. It's a strategy all about, spotting those hidden gems with huge potential.
Okay. What is a covered land play?
Essentially, it involves buying an underutilized property that's already generating some income,
Okay.
but you buy it with a long-term vision for redevelopment.
So you're not just buying it for what it is now.
Exactly. You're buying it for what it could become.
Interesting.
This strategy is particularly relevant in rapidly developing areas of Chicago.
Okay.
You know those areas where land value is expected to skyrocket?
So you're kind of playing the long game here.
You're anticipating how certain neighborhoods will transform over time.
Yeah.
And you're positioning yourself to capitalize on that growth.
Okay. So I buy a property now.
Right.
It's making me some money.
Uh-huh.
But in the future,
Down the road.
I'm going to redevelop it
Exactly.
to make even more money.
That's the idea.
Okay. Give me a hypothetical example.
Sure. Let's imagine an aging strip mall
Okay.
in a gentrifying neighborhood like Logan Square.
Okay. I can see that.
Now, this strip mall, it might be generating some rental income from the existing tenants,
Right.
but it's not exactly a prime piece of real estate
Yeah.
yet. But with a covered land play, you would acquire this property,
Okay.
continue collecting rent from those existing tenants,
Mm-hmm.
but all the while you're planning for that future redevelopment.
Okay.
Maybe into a mixed-use complex.
Right, with apartments and shops and
Exactly. Residential units, retail spaces, maybe even some office space.
So you're basically covering your initial investment.
You're covering your costs with that existing income
Yeah.
while you wait for the perfect time to redevelop and cash in on that increased land value.
Okay, so it's all about timing.
Timing is a huge factor.
Yeah.
As Michael emphasizes, this strategy requires a deep understanding of local market dynamics,
Okay.
zoning regulations, development trends.
So it's not just as easy as like buy it and sit on it.
It's more nuanced than that. You need to know what's happening on the ground
Yeah.
and anticipate future demand.
Yeah. So there's some homework involved.
Definitely some due diligence is required.
Makes sense. Okay, so what's another innovative strategy?
Another one he talks about is investing in distressed commercial REOs.
Distressed commercial REOs.
Okay, that stands for real estate owned.
Okay, what does that mean?
These are typically properties that have been foreclosed on by banks
All right.
and are now being sold off, often at a discount.
So they're kind of like those bargain bin properties?
You could say that, yeah.
Okay.
They often require more initial effort and capital to stabilize.
What do you mean by stabilized?
Things like renovations, upgrades, maybe even tenant placement.
Okay.
But once they're generating income,
Yeah.
They can become real cash cows.
So it's kind of like you're fixing them up.
You're adding value.
Yeah.
You're turning them into something desirable for tenants.
So walk me through a hypothetical example.
Sure. Let's say there's a foreclosed office building
Okay.
in Niles, a suburb of Chicago.
Okay.
Now, it might need some work,
Right.
but with the right vision and execution.
Yeah. Could be transformed into a desirable space for multiple tenants.
Okay.
You lease it out, and there you have it, a passive income stream.
From something that was considered distressed.
Exactly. You're taking something undervalued and turning it into a money-making machine.
That's pretty cool.
It is. But as Michael cautions, this strategy is not for the faint of heart.
Yeah.
You need to have a solid understanding of property rehabilitation.
Right.
And a willingness to take on a bit more risk.
It's higher risk, higher reward.
Exactly. You've got to be comfortable with that level of risk.
Okay, now you mentioned a strategy that's becoming really popular.
Right.
Especially in tourist destinations.
Adaptive reuse for short-term rentals.
Okay. Adaptive reuse for short-term rentals. What is that all about?
It's all about taking existing commercial spaces and repurposing them for short-term rentals.
Okay, so like Airbnb.
Yeah, exactly. Catering to tourists or business travelers.
So instead of having those long-term leases, you're kind of getting into that, short-term rental market. Okay.
And Chicago, with its vibrant tourism and business travel scenes, is a prime location for this type of strategy.
Give me a hypothetical.
Okay, so think about those underutilized warehouses.
Okay.
In River North.
Yeah.
A trendy neighborhood near downtown Chicago.
Right.
Now, instead of sitting empty, they could be transformed into stylish loft apartments.
Okay.
Perfect for short-term corporate rentals or tourists.
So you're kind of giving them a little bit of that, Chicago experience.
Exactly. You're capitalizing on the city's unique character.
I like that.
It's a win-win.
Okay, so we've uncovered a lot of different strategies.
We have a whole arsenal of passive income strategies.
But before we get carried away, dreaming of real estate riches.
Right.
What are some of Michael's key tips for navigating the Chicago market?
He emphasizes a few crucial points.
Okay.
First and foremost, remember that Chicago isn't a monolithic market.
Right.
Each submarket from Naperville to Oak Park has its own personality, its own trends, its own opportunities. So what works in one place might not work in another.
Exactly. You need to do your homework.
Yeah.
Understand the nuances of each specific area.
And that leads into location.
It does location.
Yep.
Michael stresses the importance of targeting properties in areas with strong economic fundamentals.
Like what?
Things like job growth, population growth, a healthy rental market.
Okay, so I got to do my research.
Your research is paramount.
Yeah.
It's not just about snagging a bargain. It's about understanding the bigger picture.
Understanding how all the pieces fit together.
Exactly.
Okay.
Now, speaking of strategy, Michael also encourages diversifying your approach.
So don't put all your eggs in one basket.
Exactly. Spread the risk, explore different options, combine different passive income strategies to create a balanced portfolio.
Makes sense. Spread the risk, spread the love.
That's the idea.
But this all seems pretty complex.
It can be.
What advice does he have for, somebody who's not like a seasoned real estate investor?
That brings us to one of Michael's most important tips. Work with local experts. He cannot emphasize this enough.
Why do you think that is?
Because it's that critical.
Yeah.
Someone like Michael has dedicated nearly 4 decades to building his knowledge and network in this city.
That's a lot of experience.
It's invaluable.
Yeah.
Whether you're a seasoned investor or just starting out.
So it's like having a guide.
He's added someone to help you navigate the complexities of the market.
Okay. Besides working with local experts, what else does he have for us?
One final piece of advice. Stay informed.
Stay informed.
The market is constantly evolving.
Right.
New trends are emerging all the time.
Yeah.
Keep an eye on the news. Attend industry events. Connect with other investors.
Okay.
Never stop learning.
So being adaptable.
Absolutely.
Yeah.
Recognizing that real estate is a dynamic game.
Okay, so give me an example of how I need to adapt.
But for example, the rise of e-commerce has fueled a growing demand for last-mile distribution centers. Okay. And the way people use office space is evolving in this post-pandemic world.
Yeah.
By staying informed, you can adapt your investment strategies and position yourself for success.
It's all about staying ahead of the curve.
Exactly.
Okay. It seems like we've gotten a real crash course in passive income strategies.
We've covered a lot of ground.
In the Chicago market.
We have.
And I'm sure our listeners are ready to hear Michael's final thoughts.
Right. what are his ultimate takeaways for those seeking passive income in Chicago real estate?
Yeah, let's wrap this up.
I think if you really boil it all down, Michael's main point is that Chicago's commercial real estate market does offer a lot of different ways to generate passive income.
Yeah.
But it's not like some get-rich-quick scheme.
Right.
You're not going to just, snap your fingers and have money pouring in.
Yeah.
It takes work. It takes research, a solid strategy.
Yeah.
And I think he would say probably the most important thing is finding and partnering with experienced professionals.
Like himself.
Like Michael, exactly. Yeah. People who know the Chicago market inside and out.
Well, and I think what I'm hearing from you and from his advice is that it's so important because, like you were saying earlier, he spent decades building this knowledge.
38 years.
Yeah, and it's something you can't get overnight.
Mm.
It's
experience.
It's experience, yeah.
It's that network of connections.
Right.
It's the understanding of how things work.
And even in Chicago, he talks about how it's not just like, oh, Chicago real estate.
Every neighborhood is different.
Yeah, it's hyper-local.
Yes.
So I think if somebody is listening to this and thinking, okay, this sounds interesting, what's like the first step?
I think the first step is really thinking about what interests you the most.
Okay.
Are you somebody who wants to be completely hands-off?
Right.
Do you like the idea of those NNN leases?
Yeah.
Or maybe you're more intrigued by the potential for, transformative growth with those covered land plays. So really kind of think about where your interests lie.
Assess your risk tolerance.
Exactly.
Yeah.
And then you can start diving deeper into specific strategies.
Right.
Maybe reach out to an expert in the Chicago market.
Yeah. I mean, obviously, Michael has a ton of information on his website.
He does.
ChicagoDealFlow.com.
A wealth of knowledge over there for anyone who wants to, really dive deep into this market.
So I think we've learned a lot today.
I think so.
About passive income in Chicago real estate.
A lot of great insights from Michael.
Yeah. So thank you so much to Michael Linton and the Chicago Deal Flow team for providing this information.
Absolutely.
And for our listeners, keep exploring, keep learning.
And stay informed.
Stay informed. And who knows, maybe you'll be the next big success story.
Maybe.
In the Chicago market.
I hope so.
All right. Thanks, everybody.
Thanks for listening.